There's no reason for you to be looking in a primary market if you can't afford $3 million. There's no reason for you to even be looking at a secondary market unless you can afford, $1 million. Mailing letters, right? Mailing letters is easy. That's the easy way, right? You can buy a list, right? You can buy a list easily of owners of like storage facility owners. The lists suck, just so you know, they're not like good. So just expect like, a 1% callback rate, right? So if you send out 1,000 letters, you'll get maybe 10 people to call. So, and then out of those 10, maybe one of them will be interested in like, working with you and stuff like that. So you just have to, you just have to know that mailing out letters is easy, but when you get that call coming in, you need to be on top of it. You need to know what you're talking about. You have to understand deal analysis. You have to be able to talk to them and get them to know, like, and trust you on the phone. All right. So mailing letters is easy, and then cold calling is hard. So we choose the hard way. Why do we choose the hard way? Because nobody wants to do cold calling. That's why, right? Okay. And then finally, the virtually driving for storage. I'm going to show y'all how I do this, but essentially all I do is I just go onto Google Maps. All right. And then I just search. Right, storage. Okay, now real fast before we go on to Google Maps. Okay, so Marshall is asking, how do you get the list of owners to cold call? That is what I'm going to show you right now. Okay, so that's what I'm going to show you. Okay, so before we go on to Google Maps, what I want to do real fast is I want to show you guys just the difference. Do you guys know this, right? I don't know. You all tell me if you know this or not. The difference between primary, secondary, and tertiary markets. Okay. And before you really start getting into, anything with storage, you have to understand these three different types of markets. And this is really just commercial real estate in general, the commercial market. Okay. And I just draw it like this is kind of what I do. Okay. So this is the primary market. This is the secondary, and this is tertiary. Okay, so primary would be like, like Nashville, right? Nashville is like a primary market, right? If you go onto Google Maps and you search like storage near me, all right. And you see that when storage near you is like, if you're living in like a major metropolitan area, you're going to see like the REITs, right? Primary is like REITs. Primary is like U-Haul, Public Storage, Extra Space, all these big players. Okay. And so, and typically those properties are like super expensive. And I teach, don't even look in primary markets unless you can afford like 3 million plus facilities. Okay. If you can afford 3 million plus facilities, maybe there's a market out there that you can look in. But if you can't afford $3 million, then you should be looking to either secondary or tertiary. So primary, right, is 3 million. That's a 3 million plus. Okay. And population is like super important. Population is really important as well too. Population of primary markets is like greater than is that a less than or a greater than 250,000? And so you want to do a population of like, you'll just know that like when you're Googling population of Nashville and it's saying like, whatever it is, 1 million people, 1 million, you just know that's a primary market, right? And then what I do is I look now in so I'm in this range. I'm in what I call subprimary market. All right. The subprimary market is kind of in between secondary and secondary and primary. And this population is called, I call it the subprimary market. Subprimary is, and this, if I do that, it looks better. All right, Jim. I don't know. That's supposed to be like a greater than sign, but I always mix up greater than and less than, just so everybody knows. Okay, so subprimary is the population is going to be, all right, less than 250, so probably around like, let's say 150K to above 250, to above 2, yeah. Okay, so anyways, 150 and up. Okay, so subprimary is like 150,000 to 250,000, right? And primary is like 250,000 plus. Okay. And then you have secondary markets. Secondary market, and secondary market is, oh yeah, and the price range for subprimary is going to be like I would say 2 million plus. 2 million plus. Okay, for subprimary. Maybe more. It's a lot. Sometimes it's even more, right? But it's going to be more expensive. And then secondary is secondary population would be like, you know, I would say like 75,000 to 150K population. Okay. And then the price range is going to be like a 1 to 3 million. Okay. And then you have what's called subsecondary. And these are all cities. All right. So primary market, these are all cities with populations. Okay. Just so you know, this is Nashville. And then subprimary is going to be the suburbs of Nashville. Right. And then secondary is going to be Clarksville. So we're buying a facility in Clarksville, Tennessee right now. That is a secondary market. Okay. And then subsecondary would be like a suburb of the secondary market. All right. And the secondary market, the subsecondary market is going to be, you know, I would say 25 to 75K population. And then also the price is going to be like maybe 500K to 1.5 million. Okay. Subsecond. You see kind of how I'm working it? I'm going down, right? Each market I'm going down. And then you have the tertiary market. Tertiary market just means country, right? Country. So then you have two different types of country markets. You have the 25K or less, and you have the 5K or less populations. Okay, 5K actually is actually like, you know, a couple 100,000, you know, less than, okay, wait, hang on, less than, you know, less than 300K, right? And this is going to be anywhere from like, let's say 700K to, you know, to 300K, something like this. Okay. And this is like less than 300K, so little tiny facilities. All right. So now you kind of have this idea. So you're asking yourself, what can I afford to buy? Right. You're reverse engineering where you should be looking. There's no reason for you to be looking in a primary market if you can't afford $3 million. There's no reason for you to even be looking in a secondary market unless you can afford, you know, $1 million. If you can't afford that, there's nothing wrong with it. You're just looking in a different market. You're looking in tertiary markets. And what's so funny is that, you know, back in the day, like all these main players, they were all in, you know, they were all like primary market. And then like primary markets started to get oversaturated. So now you're seeing a lot of like primary markets coming into secondary markets, right? So for instance, I live in Tallahassee. Tallahassee has a population of like 200,000 people, 200,000 to 300,000 people, depending on the time of year, right? I don't live in a primary market. Now, the downtown part of Tallahassee, like the very downtown, there's like, I think one Cube Smart and maybe like, I don't even think there's any U-Hauls here or anything, there's like one, like, so when you start looking on Google and looking for storage in the areas that you're interested in, you have to be aware of who the players in those markets are. That's the purpose of me showing you this. Who are the players? And you will really start to recognize that in a primary market, you have all the bigger REITs there, right? And then you might have some like, some like life storages, they're like wannabe bigger players and stuff, kind of maybe in these primary markets, they're growing, right? But there's all these huge players in these markets. And then every once in a while, you'll have like some massive huge storage facilities that are just one-offs, or whatever. Like, so for instance, like in Tallahassee, we have King Storage is what it's called, or Storage King or something, and they have like within the Panhandle in the South Georgia area, they have, I think maybe 6 or 8 facilities, maybe 10, I'm not sure, so they'd be kind of like us, they're a good secondary market player, and they really they're in Valdosta, which is where we're at. We're in Tallahassee, we're in the Panhandle, Florida, we're in South Georgia, and that's where they are. They're kind of like us. This is a secondary market player, right? And so, you really want to kind of pay attention to this, and you want to know how much are each of these facilities in each of these markets going to be. So there was a facility that came up for sale in Tallahassee like last year, and it was like $4 million. And I had never seen a facility in Tallahassee come up, or anything like that. But this is a sub-secondary to primary market, and it was a $4 million facility. Okay, so you just have to know that however much money that you can come up with is where you should be focusing your time and your energy to look. And you just have to know it's the 80-20 rule, right? With financing, you're going to have to put 20% down. So when you run your your numbers, if you can only come up with 50 grand, then you should not be looking in secondary markets. I would say, unless it's like, a small secondary market or something like this. But but actually, honestly, I think secondary markets are really they're becoming more expensive, is what I'm seeing now, just because of what happened over the last couple of years. So if you can only come up with 50 grand and you can only afford $500,000, then, don't waste your time looking in a secondary market. Look in tertiary markets. All right. This is because I'm talking about, we are going to be building our lists of owners that we're going to be talking to. And what we do in turnkey acquisitions, like when I bring students on, because essentially my turnkey acquisitions virtual, the assistants, what they do is they just get the parameters of the student, because we find our deals for my students. And then we get the parameters. So the students tell me, look, I only have 50,000, I only have $100,000, and I want to be in Missouri. Right. So if somebody's telling us I have $50,000 and I want to be in Missouri, we're not looking for a facility in St. Louis. We're not looking in these big areas. We're looking you can't look in Branson, Missouri, because Branson, Missouri is super expensive. Right. So we have to find little tertiary markets, and we start talking to the owners in those markets for that student. All right. So this is what you guys have to think about when you start building your list. How much money can you afford? And which areas should I be looking in, so that you're not, and this is one thing, because when we started with my virtual assistants, and they were just building lists, and they would have all the U-Hauls and Cube Smarts on the list. And I was like, do not put those. It's not like we can call the owners of those, you can't call the owner and talk to U-Haul, right? So don't put those on your list. Don't call Monster, don't call Life Storage. These are all big, huge players. You can't call them. Okay.